Hey folks, welcome back to Honey Money SG, and this time it's another Endowus Roboadvisor Portfolio update for the month of February 2022. Now, just when you thought January 2022 was the worst month for our stock portfolio, February hit us with even more bearish news. So the US Federal Reserve is expected to hike interest rates of 0.5% at least in the month of March, right? And Goldman Sachs has predicted that the number of interest rate hikes this year in 2022 would increase from 5 times to 7 times. Now, we even had an emergency Fed meeting on the 14th of February, Valentine's Day on Monday. And over the weekend, we even saw President Biden, US President, telling his American citizens living in the Ukraine to actually go and flee for their lives and get out of Ukraine because of the possible Russian and Ukraine war border conflict. So a lot of bearish news has been really scaring the market, and a lot of people are selling out their shares, which is why your Endowus portfolio may not have been performing well over these past few weeks. But regardless, right, let me just catch up on what were my December performance numbers for my Endowus, and then later I'll go through my current portfolio results. So in December 2021, if you look at my previous video, I actually made a total gain of 3.1k. That is inclusive for both the CPF and the SRS portfolio. And so for the CPF portfolio in December was gaining around $1,278, which represents a percentage gain of 10%. And then for the SRS portfolio, it gained around $202, which represented a percentage gain of 1.6%. So last year in December, both of these CPF and SRS portfolios were gaining quite a good percentage, right? But in this year onwards, 2022, don't expect to see really good results. I'm preempting you. So let's go to my Endowus portfolio. Okay, so here is my Endowus dashboard. You could see my investment value is now $29,300. My total gain of loss is close to 1.9k, which is a far cry from the 3.1k in December, right? And for reference, today's date is the 12th of February. So you can see the market has actually fallen quite a bit, especially since December. So we are not getting the gains right now. If we move on to my CPF portfolio, previously, it was gaining around 1.2k, right? And now, the gains is now close to $500, which means I've made an unrealized loss of around $700 from December. So that represents a really bad performance on the S&P 500 index as well. Because if you have seen how much the S&P 500 has fallen, then these numbers would not really surprise you, because my portfolio is really 100% in the LionGlobal Infinity US500. That tracks the S&P 500 index, right? And I think SRS Dimensional Honey Money is not working well either. Previously, I was around $200 gain. Now it's a $200 loss. So that's like a $400 of delta ever since December. And we are now in the red for my SRS portfolio. And that's 100% in the Dimensional Global Core Equity Fund, right? So these are really my two portfolios for Endowus, and they have not been doing well ever since December. But I guess it's the same for all of you, right, who have invested in the same stuff as me. Let's take a look at the detailed performance of my portfolio. Yep, so you can see my previous portfolio gain was around 3.1k. Now it's 1.9k. So that represents that I lost around 1.2k over these 2 months since December, which is really unfortunate. Okay, we take a look at the returns, right? The simple return and the time weighted return. So in 1 month's time, it has dropped around 4.5% time weighted. Okay, 6 months time, it was flat. So that means my investment portfolio has remained the same for the past half of the year. But if we look at the all-time time weighted return, of course, it's definitely positive, because S&P 500 and the world indexes had a really great run in the year of 2021, right? Especially the major indexes has been lifted by all the FANG companies, excluding Facebook. But past performance is definitely not an indicator of future performance, because we had a really good year of 2021 for index funds. Doesn't mean 2022 will be a good year, especially we've seen so many bad news in the first 2 months of 2022. So I really don't know where this will take us for the remaining. 1 year later, we come back to check whether this video aged well or not. So for those who are really curious in my Endowus portfolio, if you're new here, I only buy 2 things, right? 1 portfolio for each fund. So LionGlobal Infinity US500, This is for my CPF investing portfolio because it's the only fund that I could invest in CPF that tracks the S&P 500 index. I don't think at this stage in the market there are any other competitors offering such products. And the expense ratio is quite reasonable. We are talking about a net of 0.36 of expense ratio, which is significantly higher than those Vanguard funds or iShare funds, right? Because this is a unit trust, it's not an ETF. So they need to have more expense ratio factored into that. But it's the only choice. We do not have any other alternatives. So if we add the 0.3 excess fees charged by Endowus, it will come to a total expense ratio of 0.36 plus 0.3, which is 0.66 total expense ratio if we invest in this LionGlobal fund. And then for my SRS portfolio, which is a 47% allocation, I invested 100% into Dimensional Global Core Equity Fund. So this tracks like the MSCI World Index. So it's a more global fund instead of a US concentrated equity portfolio. But it only focuses on the developed countries instead of the developing countries. So we look at the expense ratio. Fund level fees 0.26, no rebates, so net is 0.26 fees. Coupled with the 0.3 excess fees by Endowus Single Fund Smart, that will come up to a total of 0.56%. So that's it for my SRS portfolio, 100% into this fund because it's really cheap and I felt it was quite good. So let's take a look at my underlying holdings, right, in my combined portfolio. Apple definitely takes the highest spot because it's the world's most valued company by market cap, followed by Microsoft, Amazon, Meta, Alphabet, and Nvidia. So Meta has actually fallen quite a lot. In case you don't know, it's the new name for Facebook. So they have really taken quite a hit because of their lowering daily number of average users as well as their monthly average number of users, right? It's really not doing well for this company in terms of the forecast. So we'll see how the metaverse plays out for Meta, whether in the long run it will be good for them. But for now, metaverse is ultimately still a relatively new concept that we will not expect to see any profits in the short term. And for the other big cap companies, because of the bearish news hitting in the markets, everybody is just selling down their positions, and that affects all these big cap holdings as well. And that's why those are really affecting your portfolio in the downward trend. And for those who are new to Endowus, you will have this model asset allocation where you can choose your gold type. For me, it's just core. I'm investing in the core portfolios using my SRS and my CPF. I do not invest using cash because I felt that there are better alternatives if we were to use cash to invest. And you can choose between a flagship or an ESG. So depending on your risk profile, you could go from very conservative to very aggressive, and then Endowus will actually go and tailor the portfolio suitable to your level of risk acceptance. So you guys can play around with the charts determining the past performance, but remember that is not an indicator of future performance, right? So yep, here's my short sharing of my Endowus portfolio for the Feb 2020. I think it's not a good performance for this year, but I guess everyone who has invested since late last year has the same performance. So you can't really blame Endowus for that. I think everyone is just experiencing some pain in the market. And what you should do is really to either buy the dip or dollar cost average, because markets in the long run would go up. I'm talking about really long run, right? Like over 10 years, because we may see some market fluctuations going down. In fact, we may even have a negative year. Who knows, right? But as long as we keep our funds invested in the long run, we are expected to see it going up in the long term. So with that, if you really enjoyed my transparent sharing of my Endowus portfolio, do help me comment a thank you at the bottom of the page. I'll really appreciate it. And let's get back to the video. Alright, welcome back. So you have seen how badly my Endowus portfolios have done for this past 2 months, and I'm sure those who are invested in Endowus since last year, you will experience this really downfall as well. But it's okay, right? We are all in this together. Doesn't mean I will make money and you won't make money. I think it's just a market-wide sentiments when bearish news hit us. So continue to dollar cost average. I still think that's the best strategy because you're ignoring market timing and just putting in funds regularly to make sure that you're continuously invested throughout the peaks and the troughs. Now, so for my opinion on whether you should use Endowus or not, it all depends on what you're investing with. If you're just investing using cash, you could go with brokers like Interactive Brokers, Tiger Brokers, or Moomoo Brokers, where you could get your one free Apple stock, right? Just get that one free Apple stock first, then decide which one you want to use next. But for CPF investing, there's really no other alternative other than Endowus because they are the only platform that allows you to invest using your CPF into the S&P 500 index. Now, for SRS investing, I do have a different opinion, I actually outlined that in my previous video on where is the best place to actually invest your SRS if you want to buy into an index fund. So do check this out. This will be my new investment strategy using SRS. And with that, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.